Good. Hi mate, how you doing?
That's about mate, you?
Good, thanks buddy. How's things mate, been working?
Yeah, so I was just trying to set it up. Yeah. You say working, you say?
Yeah, you've been working in the day, yeah?
Yeah, mate, yeah. Yeah, got back at 6:30, 7. Why you?
Not much mate really, the taxis are quite quiet to be honest.
Yeah. Is it all building up now? Because COVID's sort of calming down now, isn't it?
Yeah, it's a little bit quiet, it's busy on weekends, but I think, I don't know, there's a few more cases and then there's a little bit of a upset at the moment, so I think people are still on edge. So I think this mask release bloody thing will make a big help for the end of July. Lift that off, a restriction.
Yeah, so it's all good back. That's when it's going back to normal, isn't it? Kind of.
Yeah.
So,
Can you see my screen okay?
yeah. I'm just looking at it now.
Okay, cool. So have you been looking at the bunker stuff, yeah?
Yeah, I've been watching the videos on Forex at the moment. So going through them. Sort of working my way through, and I did some bits of the on the Facebook as well.
Okay.
Some of them, but just trying to sort of get it to click in my head, if you know what I mean. Quite a lot of information there at first.
Yeah, it's a lot, mate. It really is a lot.
Yeah.
Yeah.
Just watching videos over and over again.
There's it's like I got 22 but the rules on the screen, so that's enough by itself, and then obviously try and break them all down and combine them all together. Really, there's more than that. I'm adding to it pretty much on a weekly basis now. I need to add another 3 to it, so it'll be quite a lot. But this is what I'm looking at. What I did early on was there's a lot of this on my charts on my screens, so it's good to keep it on there just to look back and see where you took trades and stuff. But it's just too much of it, so I deleted all my charts, or most of them, the artwork kind of thing, and then I'm going through them all with you. I'll do one. I'm sure we'll.
Well, is yours save then? So when you're doing stuff, it's saving on there.
Yeah. So you asked me about trading view early on. So what you need to do is, I don't remember how much it is. Trading view. If you go to the actual home screen, trading view, it should tell you plan. Yeah, the top right, you'll have an option of plans. So this is the one I've got, the pro plan one, but I don't pay that. So what you need to do is you can have this for a 30-day free trial. And then just take the free trial, but just make sure put in your diary or alarm on your phone to remind you, like 3 or 4 days before that trial ends. You need to email them saying, I really like the pro version, but it's too expensive. I don't want to pay that. And they'll drop it to about $60-70 for you, which is about 40 quid.
That's not too bad, is it?
So it's but yeah, I've had it a year now, and the day that full amount that's just come out, I think it was last week. So you get your first year for about 40 quid. It's pretty good, to be honest.
Yeah, it's not too bad if you're making the money. It's not.
Yeah, that's what I thought. I was kicking off the day. I was like, oh my god, I just forgot about it really. I was thinking, shit, it's been a year so far. I thought, well, you know what, I'm making good money now, so can't really complain about it.
Yeah.
And that's in dollars as well, so it's only about 130 quid, it's about £11 a month, something like that, £12 a month. So
Yeah,
isn't it? I need it. So yeah.
How long do you think you'd be kind of doing it where you kind of sort of understand it? Do you know what I mean? Where you kind of sort of turn the corner, if you know what I mean? There was that point when you said you were kind of just looking on YouTube and stuff. So the way you're doing it first?
No, not really looked at YouTube much. Just a lot through the academy, mate. With so I am academy. So you need to be watching Jenna and Rock Kumar, and obviously Sean and David, they do their sessions as well. I'm the centre. If you really want to go into it deeply, which I'm guessing you are, to make a sort of at least a part-time, if not a full-time thing out of it, then I would suggest that you get on to buying the boot camp add-on as well. They're very, very good. Where are we? I'm showing you a couple of lives.
I've done some lives the other day.
Say again, mate?
I was watching some lives the other day.
Yeah, they're pretty good. So John Fibonacci, he's quite a good one.
Yeah.
I've only actually watched one of his, so I need to watch more of him. And then you've got Rock.
Yeah.
Rock Kumar, he's on at night, so Tuesday, Wednesday, Thursday, or Monday, Tuesday, Wednesday. Monday, Tuesday, Wednesday, I think he is Eastern, obviously it's 10 PM our time. Zach, he's very good. And then you got Rock, where is he? Here, Rock. So he's pretty much on every day, yeah. So 7 AM and what's that, 6, 11. Yeah, either 7 AM or 11 AM. So yeah, he's very, very good. They're the ones I would watch. I do watch.
You've been on this for a year then, have you? Yeah, I am.
I've been trading for just shy of, I think it's 2 years next week.
Yeah. Is that all from the academy, or is that?
Yeah.
Sort of do some, yeah.
Yeah, it's all from the academy. This was one of the. So I started to do trend trading in the start, which is what they pretty much teach you as retail traders, and that's pretty much what you can learn off YouTube. Really, there's a bit of smart money on there, but you know it's not enough, I don't think, for you to fully grasp and understand it. And if you want to ask any questions, then you can't really. That's the way I think about it. The trend trading was just literally putting lines in, mate. So you just needed 3 touches for a trend. So you'd have 1 touch here on the line, 2 touches, and then 3 touches, and then just literally take the sell or the buy.
Yeah.
It's as simple as it. It was okay. It does work, you know. But this is a prime example of if you got in here and you were selling, you're in profit. Obviously, all of us are greedy, so we just keep on going and going and going and want more and more and more. What happens? The bank comes in. What they do? Take you out. Then it drops the way you want it. Yeah. So this is where I was getting very, very, very frustrated. Yeah, I was taking the sells. I didn't really understand how to take partials and to take partials and move my stop losses and stuff. So I was just letting it run, and then just coming back, and it was just taking me out. So yeah, that was very, very annoying, really. So
that one there. So if you sort of saw, the one you were just on a second ago.
As well.
Yes, yeah. So if you saw that, how would you know where to put your stop loss so you didn't get taken out?
You don't. That's the frustrating part. You don't. Well, your stop loss would be, so if you're taking it from there off the trend line, you would typically go off the previous high, which would be this one here. It's not much at all, but it is still higher. So people will be thinking this is an amazing trade because the risk to reward is great. So a lot of people would typically be aiming for like the lows, the previous lows, down here. So people were thinking, wow, I'm risking £1 to get pretty much 40 back, but then it would get down to here, and then just go all the way back up, just enough to take you out. That's literally the banks, take you out, and then bang, dropped. And then it would hit your stop, your take profit, and that's where the big move is. But
you sort of set alarms inside that sort of thing, so you're kind of being, you know what I mean? Do you sort of, so you know it's kind of getting to a certain level?
Say again, mate.
Would you set sort of alarms in that so you sort of know it's getting to a certain level and it kind of, do you know what I mean?
Yeah.
If you're not watching, it could go down and back up, couldn't it? So you set kind of alarms to kind of warn you it's kind of on its way down, sort of thing.
Yeah, you can do, yeah. But yeah, I don't know, when you're new and stuff, and you're following simple strategies such as, you know, that trend was only literally 1 line in and 3 pink dots and take the sell or buy. So you're pretty much going off 2 confirmations, where the bankers, I'm going off at least, I don't know, 15, 18 of these.
Yeah.
There's a big difference of confirmation checklist. So it's just making it more probable, really, to make the trade successful. So I'm looking at Euro GBP. So this is a typical thing that the bank would do. So here there is liquidity sat. So basically that means that people are selling from this point. Yeah, like we we're just talking about, that's a perfect opportunity. Even if we went off this high here, this one here.
Yeah.
Some people might think, oh, that's the high, but we'll just give it a little bit more. With the banks, people really underestimate it, which I did as well. They literally have software that they can see where people's stop losses are, so that all they need to do is that. Look at the wicks here. They're taking them out and taking them out again, so you get even more frustrated. That's when they start revenge trading. They put bigger lot sizes on because they've lost all that profit here. They put bigger lot sizes on, and then the bank takes them out again. They try and re-enter from the same level. The banks take them out again. Yeah, so they're just whipping money off people on purpose.
Yeah, trying to avoid that, and that's what the hard bit is.
Yeah, you definitely don't want to go down that route. Forget all that. But you just need to understand that is what trend that we call them retail traders. That's what they're doing. So if you can understand where they are at, what the bank's roadmap is, and what they're trying to get at, then you're obviously in a better position of understanding who's doing what and why the banks are doing what they're doing. So this would be a yellow line is typically money there. So I'll just do it properly for your liquidity area. Yeah, so just start marking your chart out like this. So there's liquidity sat there. Liquidity just means you don't know, it just means money. There's orders sat there basically. So then we have this here, which is liquidity swipe or the grab. Yeah, the bank's doing it on purpose.
Yeah.
This wick here. So do you understand how banks work, as in how they trade and why they do this strategy and what mitigation is?
Yeah, well, I was watching the videos before, kind of extent, kind of. No, you know what I mean?
I'll try and explain it to you. It's very hard to explain to me. So what all these people are doing here, let's see. These people here, these are all selling, okay? So then it sells, then it sells, then it sells. The market comes back up, to this area, whether that's the bank or somebody else that's doing it, hedge funders or just general. That's just general algorithms. The market's been doing this for so long now. It will do over and over and over again the same sort of. You'll see the same style a lot of the times. So as soon as you've been doing it for quite a few months, you'll start to see the same thing, the same patterns. But this is definitely what the bank's doing this on purpose. Okay, so what the banks are doing is they're pushing price up on purpose, but then quickly pushing the price down. Okay, so let's just imagine, obviously, for the price to go up, they need to buy it. Yeah, so if you obviously understand HFX, so we've got call on puts, haven't we? Call is up and the put is down. HFX side, so this would be your buy upwards, and then this put would be your sell. Okay, so or there's another word for it, which is long. This is a short. So when you hover over your things here, see this one here? So that's long, which is upwards. See the light grey is your profit. This is your stop loss, and the dark grey, and then obviously opposite way. So this is a short. So that's your stop loss. We're going down. This is a sell. and you obviously adjust your take profit whenever you want. You can see the risk to reward ratio there, so 7.9 to 1, and this one is just shy of 4. Let's just do 4 to 1. So this is what the banks are doing. So the banks are purposely pushing price up to take all these people out, and what they do, they leave this position open. Okay, so they'll buy it, and then they will push price down. So they've got, this is what they call hedging. Okay, so they will, at the same time, they will push up and sell very, very quickly. And
Yeah.
this is why engulfing candles are quite important, which I'll cover in a minute. So this, they push up, great, they're in profit because they've said, I want the market to go upwards. But because they smash price down so quickly, they leave this open. They don't have time to close this. Yeah, so they close, they push this one down, they sell now. And what needs to happen is, I think you're on the call the other night when I was talking about overdrafts, like us having an overdraft in a bank. Yeah, so this is us in profit, or we've got some money in the current account. Here, this part is in overdraft. All this is debt, basically. Yeah, and what we're doing slowly is coming back up to this area.
Break even.
Yeah, exactly, to break even out of this position here. So that is what mitigation is. Yeah, so how we identify them is this one here, the last down before the quick up move, and that is an engulfing candle where it's bigger than the previous one. So that's how you can pretty much identify what the banks, what an IC candle is, which is institutional candle. We call them institutions. Yeah, so that's how you identify them, really. So it's the last up before the down move, or the down before the up. It doesn't always have to be engulfed, by the way. Yeah, so it does not have to be always bigger or smaller. If it is, great. If not, it's not the end of the world. Such as this one here. This is the last up before the down move, but this down here, this down candle was smaller than this one. Yeah, but you just go off the most previous one usually, and just see if it's been popped, if it's been used, basically. So that is what mitigation is. So at the moment, what they've done here is push the price down and then push back up. So at the moment, they're in debt, they're in overdraft. They need to come back down to this position to break even. But then they make the money. As soon as they come back down to this position, then they get in for buy. Yeah, and that's where we get in as well, for a buy. But this is where they make their profits. Yeah, so all this is just a game, basically. The stuff beforehand, we just trying to identify it, to identify where price is at and what they're trying to do, yeah, and why they're there and so forth.
Yeah, so, you just said your stop loss at the previous low then?
Yeah.
Yeah.
Which you can break down to smaller time frames to get a tighter stop and a better risk reward, which I'll also go over in a minute. So what we've had here is broken. Yeah, so it's not this. Leave them there. So what we did have was delete everything. Okay, so you can see here we were pretty much in the overall trend direction of bearish downward. Yeah, the market was overall pushing downwards. Okay, what happened was a change of direction, so a break in structure. So here, this is where it broke. Yeah, so obviously this is lower than this one. This is lower than this one. This is lower than this one. Remember, if it's quite tight, you're looking at the bodies where the bodies close and open, not the wicks. Yeah, so the wicks is just a distraction from true price action. We've also got lows. So low, this is lower than that low. This is lower than that low. And that low. See, that's a perfect example there. It's quite tight, but the body has closed below that. So it's classed as a new low. So that's how you can identify what way market structure is going. Market structure is very, very important. So we've got high, low, high, low, high, low, high. We didn't get a new low. Therefore, what do we get? A change. So we got a change in direction. Okay, so this was our current low. Yeah, the most current low that we had. We can see, they say always trade what was in front of you. So at the moment we can just see this one here. This did not break it. The body definitely didn't break it. Yeah, so let me mark out the body for you. See the two green lines. Yeah, so this is the low from 24th of June, about 3 weeks ago, 2 or 3 weeks ago, and this is pretty much a few hours ago. Yeah, 3 o'clock this afternoon.
Yeah.
So if we were gonna start pushing down again, then the body would have closed below this.
Yeah.
But we didn't. Okay, so what we got was a break of structure here. Yeah. So the body's here, closed below, above all this here. So this means we're now in a change of direction, in an uptrend, in a bullish market. Yeah. So the market wants now to go upwards. So and this is where people do get confused as well, because people would think this is a break of structure. It is, but it's not broken the actual body structure. Yeah. So what we would be looking at is for price to come down to this price here, because all this is just banks along with retail price and just general Joe Blogs people, up, down, up, down, up, down. That's all the market does. So when we see the last down before the up move, we are now, that's our first step. Yeah, we're pretty much identifying the institutional candles rules. Top-down analysis for the weekly, the daily, the 4 hour, you just need an overall trend direction, which you can do that now, or you can do it a little bit later on, to be fair. So number 2, where's the order block? Yeah, so this is the most current order block. Order block on IC is the same thing. Okay, so this is the last down before the up move. So we want price to come back into here. Ideally, we like for it to have a little bit of a distribution. So just it stays around here for a little while, not too long. Yeah, and then push up. That's where we get in. Yeah, we'll take it up to these previous highs here. Yeah, so the market likes to go to previous lows and previous highs. So there is an opportunity, there is a chance that it's going to break through. Yeah, so because it has, at the end of the day, it's broken structure of all this. Yeah. Just because it's not closed here, we've not created a new low, there's nothing stopping. Oh my God. Let me just get this, mate. Let's keep on phoning me.
Yeah.
All right. So you there?
Yeah.
Yeah. So there's nothing stopping this in creating a new low, and we don't know if it's going to happen until it happens, basically. And if it does, it's going to take us out of our stop loss, which is just tough shit. And that's why it's important for risk management. Okay, so if Body comes up to here, comes down to here, it may go across and distribute and do have a sideways market for a little while. You could take the trade, yeah, and we could be in a little bit of profit from maybe just up to there, and then all of a sudden it'll do that. So it's just, this is again why risk management and trade management is important. So you just need to feel comfortable when to move your stop loss into break even or stop profits. Yeah, so you just need to figure in your mind what you're happy with. So my target, when it's going to happen, I don't really know, but my target would be £5 a day. So as soon as the market hits that, I'm happy to walk away with that. Yeah, I'm sure if as soon as I start hitting £5 a day, I'm sure it's going to start moving to 6,000 a day. But you know, for a long time, I just want to hit that amount for a long time, and you know, you can live very, very comfortably with that amount. At the moment, it's £250 a day. That's what I'm happy with to walk away. So if we took this trade here, long push. So if we took this trade and we wanted it to go up to here, yeah, and our stop loss would be typically below this wick here. Yeah, so if price came up to here and this was sat at like, you know, 286 quid or whatever, depending on your lot size, remember. Yeah, so if it's sat at 286 quid, am I happy to close the whole thing knowing I could potentially lose all of that? So that's just a strong word you've got to have with yourself, and it's hard to do, you know, because the greedy part kicks into us. But I've got a goal. I've got my target, which is 250 quid. If that's what I've set out, which it is, I've got to be hard on myself to walk away. Yeah, so yes, I can move the goalpost, and possibly I could say, well, I'll tell you what, it's on 286 quid now. Let's move my stop loss to very, very, very tightly behind the price. So if price came up to here, pushed up to here, and then dropped through it all, if it comes to my stop loss, I've still secured the money, secured the bag, basically. So it's important to move your stop loss. You know, typically, you should be moving your stop loss to break even. Yeah. Around, I don't know, when it's pretty much broken structure on the 1 minute time frame, which I'll show you in a minute. So because what you don't want to do is for it to push up and you're like 80 quid in profit and then drop down again and it takes you out. Yeah, because the market will do that quite often. As you can see up here, it's retested here a lot of the time. Yeah, so it's retested once, twice, or four, what's five there, isn't it? A little bit lower, yeah, but 6, 7 times, pretty much in the same area. So what you don't want to be doing is short. So if we took a trade from there and wanted to take it down to there, our stop loss was, let's say, here. So you don't want to, let's actually go a bit lower. Yeah, so you don't want to be taking a trade from there, and this green candle puts you into profit, but this next candle then takes you out. Yeah, it comes back up to, I don't know if you can see that.
Yeah.
This one here, this candle here would take you out. It's hit the stop loss. Yeah, so you could have been, I don't know, maybe 13 quid, 9 quid. And it's not great, but I've been there. It's a bit shit. It's a bit tedious. Like, oh, I'm only doing this for 9, 12, 15 quid, 80 quid, whatever it is. But that could be, you know, 100 quid, 120 quid, and it could be 5 grand, 10 grand. You know, the big boys, they play with massive lot sizes. That, yeah. I don't know how much is that. That's,
yeah, so could you set alarms along that? Do you know what I mean? At different points.
Yeah, you can do. Yeah, I'll do that in a minute, mate. I'm gonna take a trade. Yeah, you just don't want to. You don't want to lose out. Basically, it's it's 50-50 really. Mate. It's what you should be doing is putting your stop loss above this wick here, which is the previous high. That's the sort of number one rule of thumb in Forex, which is fine. So that would have saved you. You know, all these wicks in here none of them came up further than that wick, so you would have been fine. Yeah, and then you would have gained all that drop, and it would have hit your take profit. So it's just how you want to play it, really. I mean, it's, you know, everyone's different. Do you want to be like quick and scalping and take secure the bag quickly? If you're playing with big lot sizes, you can do that. You know, it's easy to do. But like I was saying, this is what we're looking for ideally. So what I would be doing firstly is just literally mark that out. That's all I would do. Yeah, until, so get a horizontal line. You set an alert, add alert, and just create. Yeah, until price comes down to here, if it ever does, there's nothing that we can do. There's no point watching it and watching it and watching it. So just add an alert to it, leave it be. Yeah, and then when price comes to it, if it does come to it, which it looks like it wants to, yeah, we will get a notification ping when it gets to there. And then we've got enough time to analyze what we want to do because we are looking at this level. Yeah, so then we can start implementing different things and seeing where we want to get in, and tighter stop losses, tighter stop losses. So how you would do that? Also, at the moment, this would typically be, so you mark off your entry, open, sorry, of your candle, which you can see where the black line is. And we also need to mark out 50% of the body of the candle. Okay, if you want to do it correctly, you can do it with a fib. So top to bottom. Oh, I always get it not far off. 50%, literally 50%, which is half the candle. Mark it out. You can delete that if you want. Yeah. So if we take a fib on a normal sort of analyze from the low, the wick. So I bet that lines up. Yeah, there you go. To that high. Yes, that's the most current high because obviously it's dropping now. Yeah, what do we have here? So that 78.6 is pin perfect between the two black lines.
Yeah.
Yeah, so all this stuff, it's crazy when you mark it all out, it all adds up. So what I can do there is just mark it out, go to my settings, my style. So it was between, it's between 78 and 89, isn't it? 79 and 89, yeah. So just mark that out, and then you can just delete your fib. So it just makes it a bit more clearer, really, on the screen. You can leave it on there if you want to. I just get distracted from it. So there are your two lines. Now you know that's where the Fibonacci level comes to. What all the Fibonacci level is pretty much price goes up. It's a retracement tool, so it marks out price loves to come to these levels. These are the prime levels. And then what we're hoping for is obviously to push off from these levels. Yeah, so what we could be doing now is dropping down timeframes to see if we can get a tighter stop loss. Okay, so obviously we've got the open on 50%. So if you drop it down to the 30 minutes, can we get anything tighter? No, it's pretty much identical. Yeah, that candle is pretty much the same. Drop it down to the 15. Look what we got here now. So it's lower. So if we mark that out, let's move. So this was currently, that was 3.86 to 1. Yeah, the risk to reward. So we were risking £1 to get £3.80 back.
Yeah.
Basically. Yes, but if we now pull this down, if we enter here off this 15-minute candle, what we've got now, beautiful 16 to 1. So if you're risking 1%, this is now going to grow your account if it hits take profit again by 16% growth.
Yeah.
So if you've got a £100,000 account, which like Sean has, that would grow his account £16,000.
Yeah, it's a lot of money in it.
Unreal in one, you know, that can, so for example, from there to there took why is that doing? Oh, there you go, 4 hours, just under 5 hours. So if it does the same again, hopefully it will do. Let's just move that from there, remove it to here. If that went from there to there in 4 hours, not far off, let's say that to get up to there, let's say it was 6 hours, you've done 16 grand in 6 hours.
Yeah,
pretty much. Yeah, so you could even just target here, these highs here. Yeah, so we could even get a tighter one. It's just how greedy do you want to be, or how, how anal do you want to be with your risk management. Let's drop it down to the 5 minute. Can we get anything tighter? Not really. Yeah, it's not moved that much. That's your last down there, purple one, or the up move. On the 3 minute, can we get anything else? Yeah, we've got one here. Yeah, so this is the last down candle for the up move. So let's move it again. Let's just check on the 1 minute if we've got anything else. Yeah, we've even got it's mad. How tight do you want to go? Yeah, so this now is your, yeah, that's fucking tight, that is. Yeah, so let's
This is what you do then. This is what you normally do.
Yeah,
keep going down and down. Yeah,
because obviously the tighter the stop loss, the higher the standard lots, the lot size can be. See, so now we had what was it early on, 16 to 1, wasn't it? Yeah, so that's on the 3 minute, wasn't it? So what do we have now? This is now turned into, oh God, this time things. So now we've got a 23 to 1. And remember, I moved that, didn't I, down to here as well. So if we pushed it up to, this is another thing. So you've got imbalance in here. You see the gap, naked, naked candle by itself. That needs to be filled. Okay, so that's the first. Well, that's the first take profit would be. Delete this. First take profit would be up here. So these highs here, yeah, because obviously on the way it's on the way down now. We want it to ping back up, and it, like I say, it always likes to go back up to previous highs first. Yeah, it may well break through. If we did go up to there and fill that imbalance in there, what's that? That's now a 30 to 1. So if you took that trade, that could potentially grow your account. Let's say Sean's size, 30 grand. So we went early on from 16,000. We pretty much doubled it, just because all we did was dropped it down from 30, 15, 5, 3 and 1, which took us about a minute to potentially gain an extra 40 grand worth of profit.
So it's still 1%, is it, on the?
Yeah. Yeah. So whether your if we were risking 2%, you need to times that by 2. So you're looking at about 60% growth. So let's just round it off to 30. So that's a 1 to 29.5 basically. So let's just round it off to 30. So if you're risking 1%, that is 30% growth. If it's 2%, it's 60%. If it's obviously 3%, which you really shouldn't be doing at all, would be obviously 90%, which would be fantastic. So if you had a 100 grand account, you'd be growing it to 90 grand, 190 grand, which would be crazy. So
yeah.
But if you believe in your analysis and it does go that way, which there's nothing saying it won't go, and it's all doable. But that's what I'm saying. Where do you take profit? So if it got up to like, I don't know, about here, and it was sat at like 5, 6, 7 grand, you can take partials. So on MetaTrader 4 on the app, you can close partially of your money. So if it was sat, if price was here and it's at 5 grand, you could close and take off 4 grand. And then there you go. You just secured 4 grand. You pay yourself along the way, basically. And let the rest run. So if it comes back down, there's no hard done. It's just a lesson. But you've got 4 grand in the bag.
Yeah.
And you haven't lost that £1,000 because you moved your stop loss into stop profit. Yeah. So that's just risk management, really. So.
Well, quite a good way of doing it, really, isn't it?
Yeah, which all these things,
you've got the profit, haven't you, really?
Yeah, because I used to be very, very greedy. I used to wait for price to come up to here, and because I didn't really fully understand how it used to all work, I used to get up to around about here and drop. No, it'll be fine. It just kept on dropping. No, it'll be fine. It'll be fine. It'll just on a pullback, and it'll get up to there. What happened? See you later. It just come down to the stop loss. I lost potentially 3, 4, 5. So where I could have just taken a lot of the money off the table, and if it did drop, which that's just a lesson, really. So I'm
Yeah.
glad in one way I've done it that way, because it makes me appreciate the money a bit more now. Really, I'm a lot more careful, to be honest, with when taking trades. You know, if
Yeah.
it's in profit, I will take money off the table. So
I think you probably learn that way as well, don't you? In a way.
yeah, I like to learn.
You don't want to do it again. Yeah,
So,
that's what I'm kind of doing now. Because sometimes I'm seeing it, and I'm kind of waiting, and it's starting to drop, and I forget to go back up.
yeah,
I should just take that profit.
yeah, just take it, because you just work off a plan. If you've got the compound effect, just work off that, or just even write it down on a piece of paper, or even work it out in your head. What do you want? You know, every day, or what do you need to even pay your bills, or you know, do you want?
Yeah.
Say I made enough money to pay my mortgage, the council tax, my mobile phone, and I think it was a TV licensing. I don't know why. I meant the missus was working out, so it was about 200 quid basically. Yeah, so that was just in a matter of 3-4 hours. So, but I secured 250 because that's what I wanted. I just let the rest run, yeah, and it brought me in an extra 1,200 quid. So that's just a bonus. You've just got to think about what you're happy with to secure, and then if anything else comes in, it's a bonus.
Yeah, I kind of know where I want to be, but I want to sort of start small and then work my way up.
Yeah, definitely do that one.
Yeah, I think if I aim too high too soon, then I'll probably fail.
Yeah, Sean says it all the time. You know, there's no point if you can't grow account from 250 quid to 1,000. You'll never be able to go from 10 grand to 100 grand.
Yeah,
you've got to have that concept, and it's quite hard as well playing with big money. You know, when the market moves now, my money moves like 60-80 quid every sort of small jump. You're thinking, shit, it's moving quickly, but it also drops quite quickly. So
yeah,
it works in both ways. Just remember the higher time frames is better to work off. You know, so we've got on the 1 hour, we've got quite a bit of imbalance in here. Yeah, so we can mark this out. Mark this out as IPA. So IPA is the same as imbalance. So improper price action, IPA. So ideally that needs to be filled. Yeah, so typically it usually comes in and fills half of it, which is good enough for the IPA to be filled. So you take profit, again, not being greedy, I would move my take profit to just below. Before I used to be like, oh, he'll smash through and I'll go push up there, when it didn't really. Yeah, so now I just put it just below, because it's just a probability game. If it's a good chance it's going to come up to here, it's most definitely going to come up to this area. So let's just go off there.
yeah.
So
just safe, isn't it?
yeah, that's what I should have done bloody 2 years ago. So yeah, what we've done is number one, number two, where is price? So when I mean where is price and what is price doing is pretty much, that is more for when we get on into entries. So you just need to identify, there you go, so there's also break of structure in there. So that just makes it even more probable price wants to come down to fill that price imbalance. Yeah, so there's a good chance now it's going to come. So all you're doing is putting stuff into place and just adding probability to the trade, really, of it coming down and working out for you. I think I said it last night on the call. So if you've got like 11 bloody David Beckhams on the field and 11 shit players, there's who's more probable to win. You know, it just goes off probability, doesn't it? It's just a.
Yeah.
But we also do need to be aware of higher time frames. So if we drop it to go up to the 4 hour or the daily, what do we have here? Yeah, so you also need to zoom out.
Yeah.
This has got massive imbalance here, and here needs to be filled. Yeah, so this is why it's important to risk 1%, because if this goes fucking sideways and fails us, we've lost 1%. So where's the next roadblock that we're looking at? This one down here. So let's mark this out. It's just exactly the same thing over and over and over again. Okay, so mark it out. If we were going to take this trade, where would we be taking? So long position. We'd be taking this up to these highs here. Yeah. So this would be previous low would be there. So if this came in, if this one failed and this one came in, yeah, we've lost 1% off this one, which is fine. It does play with your mindset. It's bloody hard because you get pissed off. But then we take this one, and this one works out for us. We're up 6.5%, minus the 1% we lost here. So we're up 5.5%. And that's without even breaking it down yet. Yeah, so this is on the 4 hour. So let's start chopping it down. 2 hour. What do we have?
Sometimes do that then, sort of put 2 trades there.
No, only if this one fails.
Oh, so you have the next one ready, sort of thing.
Yeah, so far there's no what would you call it? There's nothing giving it away that it wants to push downwards because it's broken structure, because it's showing us now it wants to go upwards, bullish. Yeah, beforehand all this was pushing downwards, isn't it? So now it's broken structure, so it wants to go in the opposite direction. So we're looking for buys. It wants to go up. Remember that this low did not break here. Yeah, so if it did, then we'd be looking for sells. We'd be looking to go lower and lower and lower and lower. But this didn't break so far. It's not broken. So if it comes to here and it plows through, then we know that one's fucked. That's gone. There's no point taking it. And that's why it's important to wait for the sideways market movements first before getting in. Yeah, so I'll show you on.
With that one there, you'd kind of watch a bit more before getting in, would you?
Yeah, 100%. All of them, mate. Again, that's something I've just learned in the last sort of 4 or 5 months. I used to jump in very quickly before waiting for break of structure. So let me just break this down. So 1 hour. Yeah, so the 4 hour was this black line. We've now got a 1 hour here. Do we have anything on the 15? This is the annoying part. You go back. 15, a little bit lower, but you're not going to get nothing a lot more out of that. So this will be ridiculous risk to reward. So really, that is your low there. That is your. If you want to play it really, really safe, you could put your risk, your stop loss below here. Yeah, but if you want if you're confident enough, it's going to bounce off there. Put your stop loss just below that wick. So let's see what the risk to reward is now. This will be stupid risk to reward. So that is where we got in. That's our risk to reward. If we were going to take it up, yeah, if it's here, oh, that was more than that. So that's a 21% growth. Up there would be 31% growth. So really, that one's more, isn't it? Yeah. So that one must be tied to stop loss. So 15 minutes. Yeah, but either one, it's good risk to reward. So let me show you entries on yen I took earlier on. No, EU, EN, EN, yeah, EN, yeah. So unfortunately, I missed all this. Yeah, I marked it out. It took me out, actually. I was in one of these trades. It took me out. But then when that happens, you should be looking for re-entries. Okay, so if you're not pissed off enough, don't revenge trade, because what I was looking at was this here. Okay, this up before the down move, it came into this area. Let me just delete this for you. So up before the down move, it came up to this area, into here, into this, to mitigate out. I sold it from there. Where was my stop loss? Above here. Yeah, these wicks took me out. And I was just pissed off. I didn't look at it again. What happened? It created a new low. Yeah, pretty much the body, remember, didn't close above here. So that shows it wants to push down again. So this was now the most current up before the down move. So let's just mark this out. Well, it is already. What happens? Does that. There you go. Mitigates out. I fucking missed all that drop.
Yeah.
Not great, but it happens. Yeah. So if I would have lost 1% here, lost 1% here, which I did do. Yeah. If I would have just kept my head and entered here, stop loss above that wick there, what would that have been? That would have gained me 13 minus 1%, so 12% growth in my account. But
yeah,
I just spat my dummy out and I didn't look back at it. So it happens, mate.
Yeah.
but it was just a massive learning curve. And I'm glad I did my analysis, because when I look back, look at that, the IPA imbalance has been filled. Has this one been filled? Yes, it came down to fill it. Has this one been filled? Yes. So it's nice to see when you look back. It's just a lesson, really. What happened here? Look at these liquidity. What happened? Up, bang, took it all out.
Yeah,
it's the same thing over and over and over again. What I did do though was catch that buy, and that's what made me 1,200 quid. Yeah, so because I was going off here, these candles down here. Yeah, so I think it was on 2 hour. The 2 hour, the 1 hour, I don't remember. I deleted a lot of this early on, like I said. Yeah, so I think this was marked out. Last down before the up move. Yeah, so the money sat there, the banks need to come back in. There you go, into there to mitigate. Drops it down to the 1 minute. So what you're looking for is break of structure. So I was looking to enter the black line. Okay, so price came to that black line. I had my stop loss. It was quite tight, actually, nearly hit it. Yeah, so obviously my green alarm was around this area. Yeah, I just waited and waited and waited and waited for it to come down to this area. When it did do, I just sat there as well. Remember, this is only 1 minute time frame, so it's not that long to watch. If you want, if you're busy, just move your alarm. Just move it closer and closer. Just be aware that obviously it's getting closer and closer and closer. Just be ready to take the trade. So I think I did that twice. Just moved it. So price was here, pinged me in, got an alert on my phone. Okay, it's that far. I moved it down to here, pinged me. Yeah, told me it's getting closer, obviously, and I just put it down here, and I just watched it from here now. So I noticed I didn't get in here. This is what I used to do. Let's move this for a minute. Yeah, so here you can see beforehand I would be entering bang on the line. Yeah, and you see it's had a little bit of a rejection. Yeah, but what it did do then was, there's nothing wrong with this, but you're then in drawdown. Yeah, so this is negative now. It's in the red. Yeah, so it came very, very close. Yeah, it was that one, very close. It's taking me out, but I was still in it. So I was not in it. I got in here. Yeah, around this area. Yeah, in there. Okay, so what I noticed was obviously this was going down and down and down, but what we had then was a break of structure, so showing us signs of strength. It wanted to go in that direction. So this is just people playing, the banks playing with other people, trying to take people out. Because if we look at this on a higher time frame, it's just one wick. Yeah, that wick there takes people out and then pushes up in the right direction that it wanted to go. So 1 minute entries, that they're very, very good. They're very accurate. So you just need to be, which is boring, you know, you just need to keep an eye on this, because what it was doing high, low, higher, a lower high. It's just creating these new lows. That was there. So when we created this new high low, obviously this one is higher than this one now. If we wanted to carry on doing, we would obviously create a new low, yeah, from this one, but we didn't. So we started to now to reverse in the opposite direction.
Yeah.
So what I noticed was it broke structure. Yeah, it broke above these. Obviously, it broke above here as well. Firstly, so it broke above there. The price is pushed through above these structure, these candles here. It's then broke above these ones, and it was testing these ones here. So this was pretty much good enough for me. And this happens. You know, you just got to wait and wait and wait for it. It's just patience. Just don't dive in too quickly. So you could have had an entry off this one. So this was last down before the up move. This candle came back in to mitigate this. You could have bought from there, but just because it's on a 1 minute time frame, it doesn't mean it doesn't apply. The concept still applies. Yeah, last down before the up, comes back down, mitigates, buy. So you could, that was one opportunity, long. And that would have been a fantastic very tight stop loss. Yeah, so that was your first entry, possibility of first entry, or you could have just waited for it again to come into that area, which it did do. Let me just delete everything. So let's mark that out, that little candle. So you've had plenty of opportunities to get into this. This candle here, this one, 1, 2, 3, 4 chances, 4 or 5 chances with this one to get into this trade, because it came into this area 5 times. So you could have possibly had an opportunity of 5 times to take that trade. Stop loss below. Again, if you want to play it safe, you could be putting your stop loss below here. But I had mine quite tight to here. Yeah, and then let's go back to the higher time frames. Oh, for fuck's sake. See that now. No. Right there. See now. My target was the imbalance in here. Yeah, so remember on the high time frames, it's what do you call it? It's more powerful on the high time frames. So this was now about 70, was it? Can you see that? Yeah, 68.
Yeah.
68% growth.
It's nice, isn't it? So that's one you got. That's the one you.
Yeah, so I didn't take it all the way, which maybe you think back, you think, oh shit, I should have left it and left it. But you know, how greedy again do you want to go? And you know, it could have come up to, if you wanted to take it up to this. Remember, there's another institutional candle there before the down move. If you wanted to take it up to there, it may have just got to here.
Yeah.
Waiting, and it didn't get to there. It just dropped. You'd be gutted then because you just lost in how many hundreds or even thousands off the table. Yeah, so that up there was a 72-to-1 risk to reward, which was great. So that's the benefit of the 1 minute time frames. Yeah, the smaller time frames, you can get a tighter stop loss. But to be honest, mate, to play it safe, I would recommend you going on the 1 hour, and the 4 hour, the 1 hour, and the 30 minutes. Until you're very, very confident to take trades off the smaller time frames. Not saying you're not, I'm not saying you're capable, but you know, if you're using correct risk management, 1% is still 1%, whether it's you know, a 70-to-1 or a 14-to-1 or a 9-to-1, whatever it is. Doesn't matter what that gap is, it will work it out for you. So you need to go on FX for it. Work out your lot size calculators, position size calculator. Yeah, and then just put in whatever pair you're trading. Your account currency will be in Great British pounds. So whatever, let's say your account size is $5,000. Your risk ratio, you're risking 1%. Okay, your stop loss, it will ask you for your stop loss. Here it is 26.7, tells you there, 26.7 pips.
Yeah.
26, I round it off to the higher number, and then click on calculate. 1% of $5,000, it tells you there, is obviously, which we know is 50 quid. So that's the maximum you're going to lose.
Yeah.
Yeah. So this will now give you your size or your lot size, 0.26. So when you go to MetaTrader 4, you want to take the trade, you need to put in 0.26 lot size. If we had a tighter stop loss, remember we're leaving the risk to reward at the 1%. So let's just now change this to, let's say, 13. What happens to the lot size? It's nearly doubled. Yeah, so if you can get a tighter stop loss, it's less risk, but the reward is fatter, it's greater. Yeah, so obviously the bigger the lot size, the more money it's going to kick out for you when it goes into profit. If we had, like, I think mine was what, 4 stop loss pips, it's now jumped up to 1.72 lot size. Yeah, so this is your risk to reward, which is very, very important. What else do we look for? So that was, yeah, that's pretty much entries. You just need to wait for break of structure. That's the rule of thumb with it, really, mate. Just wait for it to play out a bit sideways and then do its thing, break structure, and then get in. Settings. We got identify break of structure. We've done that. What does price want to do next? Retract or fill? So that's pretty much on smaller time frames as well, really, when you're trying to get in. Well, it works on high time frames as well, to be fair. So entry points, what is price wanting to do? Is it trying to pull back and push lower, or is it just trying to pull back and fill in the what would be imbalance if it didn't come back and fill in? Yeah, so what price has done, let's say, down here. So there's a little bit of imbalance in here, see?
Yeah.
Price at some point, I don't know when, we'll be able to come back and fill that price in. So this is good price action. Yeah, so there's no imbalance in here. So you can see this body here, this wick has come up and filled it. Yeah, so this has come up, this green candle, this green wick has come in and filled 50% of the candle, which is good enough. So therefore, there's no imbalance, because if you look on the opposite side, so if we concentrate on this candle, this one here, so this wick has filled in the left side of the candle, and this on the right side, this wick has filled in the right side of the candle. Yeah, so this little gap between the 50% and the bottom, it doesn't stand, yeah, because it's 50% filled, which is good enough. So it's not valid in IPA. Yeah, so it's been filled, same as this one. This wick came down and filled this candle in. Yeah, so that's there's no IPA there. So this is good price action. Yeah, so that's what I mean with what is price wanting to do. So when you watch it, is it coming up and filling price in, pushing up, coming down, filling price in, pushing up, coming down, filling price in, or is it creating new highs and new lows? Yeah, is it doing this? And then obviously what we've got then is a trend reversal. Yeah, it's going in the opposite direction. So we wouldn't be taking the trade anyway, because it's not going in the way we want it to.
That's a bit trying to work out when to get into the trade. That's kind of a bit I'm trying to work out at the moment, but it just takes time, I guess.
Yeah, even let's do it on the 1 hour, mate. Really, you can still do them. There's most definitely nothing wrong with it on the high time frames, as long as you're using correct risk management, which is fine. Yeah, so let's mark out this candle here, the last down before the up move. And let's start mark out 50%. Did it take us out? Don't think so. No. So yeah, really what you should be doing, prime example of, we entered here, so this is on the 1 hour. Yeah, and then obviously our stop loss should really, as a rule of thumb, like I said before, should be below the previous wick. Yeah, so let's just move this over. So we know that's the institutional candle. It needs to come back to there. So we're entering there. So we entered off that black line. We were in a little bit of drawdown. So this was the previous wick. Did that wick come down and take it out? No. So it's still valid. Yeah, and you could have taken the trade. So to be honest, mate, the 1 hour and the 4 hour are pretty much a lot better. They're a lot more accurate. The smaller time frames are they're quite lethal, to be fair. And you'll start to notice different time frames on different pairs will work best. Like gold works fantastic on 30 minutes. Yeah, so let's just look at last candles for a moment. Let's go like this one. So the last up before the down move has gone up to there. Let's mark that out. It came perfectly into there and dropped. Not much, but still, it's the concept. What else we got? This one, last down here. this hollow candle, this the last down before
Yeah.
the move. Let's mark it out. Where was your stop loss? Below this wick, just about kept you in. Yeah, it didn't touch the black line. So pushed up, and you could have ridden this all the way up, to be fair. What else have we got? Gold's very, very, it's quite lethal. It's very wicky.
Yeah, you're saying gold's a bit like this, isn't it? Gold's a bit sort of
Yeah,
hard to trade.
it's lethal. It moves very, very, very quickly. That's so this is now as a prime example of dropping down to small time frames. As I say, if you're confident. So this is on the 30-minute. Let's mark out the open of the candle. We've got here the black line. It's obviously done a massive move. Yeah, so what we're waiting for now is for this to come back up. So could we get a tighter stop loss? Yeah, let's drop it down to 15. Can we get anything tighter? Oh, where's that gone now? 2nd of March, 8 PM. 2nd of March, yeah. So we were here. Yeah, so let's move that. So now we've gone from 30 minutes to 15. We got a tighter little, because the candle body has moved. This one here, you see that on my screen.
Yeah.
Now we've got this one here. Yeah, so let's move it up. And then I won't drop it down again, because I don't think the chart will only go back a certain amount. So I might try 5 minutes. 2nd of March. 2nd of March. Yeah, it stops the 17th of May. So it'll only show you a certain amount of candles. So the 15th of May, 15 minutes on the candle of 2nd of March was here, yeah. So now we could there's other candles in there, because that's obviously a 15-minute candle, but yeah, you can drop it down to different time frames and get a tighter stop loss.
Yeah.
Waiting and waiting and waiting. There you go, bang. Yeah, you could have caught all that move, massive move.
So best for me at the moment, stay the 4 and the 1 hour sort of thing at the moment.
Yeah, the concept is exactly the same. Yeah, the 4 hour and the 1 hour. There you go, look at that, perfect. That's down, purely up move. It's broken structure, so we want to push high. What's happened? Out. That. Perfect. Come down, pushed off. Bye. We could have bought from there. Yeah, same here. That last down before the up move is broken structure. Does it come back in and pop that balloon? Yeah, that's the analysis that we use. Does this needle here pop this balloon? It does. Yeah, so that's great. That is literally perfect to the line. That open of that candle comes, that wick perfectly comes in, pops it, and then shoots off. And if you took your, I don't know whether the fable will work on this. So this previous low says high. There you go. So it's at the 89% area. It wasn't perfectly in line, no, but it was quite close.
Almost.
You're going to get an always exactly pin perfect trade every time. Nothing's always going to line up correctly every time. It's just a guide, really. Well, there you go. So let's go back. I'm going to take that fib from that low to that high. Let's mark out that 89% level. What we've got here. Pretty much touched the case to 89% and then pushed off again. So these trades on the 4 hour, that's a big move. You know, that there is that's 272 pips with Goldie drop off the last digit. So that's 272 pips from there to there. If you're betting a good lot size on there, then you know you're making some serious dough. Same with this one. Yeah, last down before the up move. Did it break structure? Yes. Broke it here. Yeah, so when we say break structure, it just basically means this has created new highs compared to these.
Yeah.
Yeah, pushed up higher, mark this out. Last down before the up move, come down to mitigate. The banks in overdraft, remember, in debt, come down to break even. Can we take a buy from there? Yeah, of course we can. We just got two options. Yeah, and if you were playing it safe, where was your stop loss? Below this wick. Yeah, you were cleared all day long. Yeah, you got massive, massive gaps there.
Yeah, it's making more sense now.
Here, you got the last down before the up move. Did this one come down and pop that? No. So do we take the trade? No, leave it alone. Don't force stuff that's not meant to be there or is not there at all. Don't see this was last up before the down move. This came back into it. You could have caught that. Yeah, and if you could have just waited a little bit longer, your stop loss could have been above this one. That would have saved you. That would have kept you in. Yeah, so you could have traded all that. Look at that absolutely massive imbalance there. So that at some point, that's on the 4 hour, that at some point needs to be filled. So therefore, what's typically, when you've got imbalance, it's typically hiding something. Yeah, so it's protecting something. What's above there, that's protect the imbalance is protecting, or below it. So you've got the last up before the down there, and you've also got this one up here, last up before the down move. So EU, I'd be looking at, because it's broken structure, it wants to push down. Yeah, we would possibly be looking at this area. So you've got an up before the down move here. Yeah, this one, or the one up there. This one up here. That's a bit too far away, I would say. But it's nothing impossible. So you just got to wait. It comes up to this area. Does it hang around for a little bit and then drop? That's when you would be getting into it, when it breaks a little bit of structure on the smaller time frames. Does it push through, and does it want to go to this one? Yeah, that's the only sort of thing. It's a bit annoying, it's a bit of a guessing game, really. But what we can do is, obviously, we implement our rules and our stuff that we can follow to try and make the rule go in, the trade going our way. So imbalance, direction of trend. The DOT is just direction of trend, which way the market's going, up or down. Imbalance, POI is just point of interest. So point of interest is like imbalance or gaps in the markets. Engulfing candle, I think I explained that to you. So it's just the banks pushing up quickly and then pushing them down quickly. That's why it's important. If we can get an engulfing candle, it's more probable that the price is going to come up to it. Such as here, look, last up for a down move. Did price come back into it? Yes, there, that's green candle here. Okay, so that would have been an absolute monster move, that would have. That down to here, currently sat at 436 pips.
Yeah.
Move that is a big move. And that did take you a month, but if you're putting, again, like I say, big lot sizes on it, that could keep you for bloody 6 months off work. So does the institutional candle take out liquidity? So I think I showed you on EG, didn't it? Is it this one I'm showing you? Yeah, so I think it was, let's say, like, yeah, liquidity sat here. Did this candle take it out? So it's not a great example, actually. So let's go. Yeah, there you go. This one there. So there's people use very tight stop losses. So you've got these stop losses in here. Did this last up before the down move take all these people out? Yes. and that is enough. That tiny little wick there is enough to take all these people out. So again, it's more probable because the banks have used that to take these people out. That is where the money is sat. That's where the bank's money is sat. So it needs to come back in to that area, into this candle. So
Yeah.
identify, did that candle take out liquidity before making the move? And yeah, that it did. That is the one we're looking at.
That kind of what you're looking for. Then when you see that, you kind of know it's more likely to go down, sort of thing.
Yeah,
You see that.
really. So this trade we could be looking at now would be down to here. We buy, we fill in the imbalance because it needs to be filled. Yeah, like I said earlier on, what is it protecting? It's protecting this up candle here. Yeah, so we could be pushing up to this area. Let's mark this out. That is the last up before the down move. Okay, this IPA is protecting it. So when I say protecting it, it will take a little while for price to fill this in and push through it. So you'll see it price hover around this area and then push up to here. And then what do we do then? Is we sell from that area. Which is the massive game of table tennis, basically, back and forth, back and forth. That was a big candle, and it's a big stop loss. So, but we could break it down, yeah, to the 30-minute, 15, and the 5, so forth. So we took that back down to where? These lows, where we got in early on, or this and this one. Yeah, so that's a 4.4, not great. So let's drop it down. Do we have anything else? There you go. The candle is now. So this is, I don't like these because it's, you've either got this one now or this one. My favorite, the one I would go for is this one because this is the one that's taking liquidity out. Yeah, that is the one, but I'd be aware of that one there, saying that it has been filled. Yeah, so this has been popped, so is that one. But just because they're popped, there's nothing wrong with price coming back up into that area. Yeah, so which it does do quite often. Let's go on the 15-minute. Is anything there? So we've got now this one here. It's the candle smaller. So now let's drop it on the 15. Have we got another candle? Yeah, we've got another one here. We could possibly drop down to 3 minutes. Do we have anything? Yeah, we've got a small one there. Small up green candle for the down move. And you could go on in 1 minute, but like I say, how greedy, how far do you want to take it? But if we move that now, so that's a 4.4, now playing with a 40 to 1 risk to reward. So you see the difference? So now you're risking that little bit of money there, but to potentially get 40 quid back off £1. To potentially get £400 back off risking £100.
Yeah.
£10 even, sorry. So we have 1 to 40, 10 to 400. Yeah, or so if you're risking £100, that could potentially make you £4,000 from there to there. Yeah, so risk management is very, very, very important. Does the institutional break structure? Yeah, I could just cover that. Does the particular move break market structure? So this move took out liquidity and then broke structure. It broke structure where? So it broke out here. Yeah, this part here broke these candles. Yeah, and then it's broken again. Yeah, this candle here. All this price action broke through, broke structure, which is good. Yeah, so it just makes it again more probable. Yeah, does the market structure? That's just a very sort of, I don't know why it's in there. It's a very general sort of question. What you're looking at, does it make sense basically? Signature move, I won't cover that. Wyckoff, I won't cover that. Check higher time frame. So if you're looking at the 1 hour, you need to ideally be looking at the 2 hour and the 4 hour for a higher viewpoint of where you want to take price. Yeah, so if we were, yeah, so if we got in off this entry up here, we at long term should be looking at taking it down to this candle down here. Yeah, so this is what, a 70 to 1 now. Yeah, but you need to have, you know, I don't remember if you remember when you were learning to drive, you know, a lot of us start with tunnel vision. Yeah, so the instructor will say to you, stop looking sort of tunnel vision. You need to start noticing the little kid on the side of the road, or the little woman, the elderly woman is crossing the road, or look in your mirror and you see a massive bloody ambulance coming your way. So it's the same with trading. You need to start opening your eyes up, start going on the higher time frames, and see number 11 sat nav. When you leave home, if you don't know where you're going, which in Forex we don't really, we start here. Where's our end destination? Where's the final destination? Ideally here. We need to end up somewhere. We need to know where we end up. Unless you want to take partials or close it along the way, that's your choice. That's just something that comes with confidence. You know, I've done this many a times. It's got down to here, and I sort of bottled it, and I'll just fucking take the money. You know, where I check it 2 weeks later, and it has come down to that area. Yeah, so it takes time. It does take time, especially if you're playing on the big 4 hours. Each candle is 4 hours, isn't it? So it does take long. 20s, 50s, and 80s. So the banks love playing with, so 85, 720, 85, 9, sort of 50, 86, 480. So round numbers pretty much like 20, 50s, and 80s, and dead numbers, so 85,000. So they're key level numbers. Yeah, number 22, that goes for everybody. So we've also got on the, I'll just cover this, mate. I know it's getting late now, so 1 hour. We've also got, I've only just sort of learned this last, I'd say about 3-4 weeks ago, daily objectives. So on a Sunday, what we typically do is what we did last night really, was mark out the chart. Oh, it was Sunday, wasn't it? Mark out the charts and identify any gaps, which is just imbalance basically. So on a Monday, we expect price to retrace, yeah, of last week's previous price. So how you can identify that, if you go down to the little settings down here, if you click on session breaks, it'll break it up for per day for you. Okay, so so that was yesterday. Yeah, so Sunday, so last week's price action, it was this, all of this. What is price doing now? What does Monday and Tuesday say? Retrace or reimbalance previous week's price action. So this was last week's price action. What's price doing now? It's coming back up to rebalance. It needs to come up to the imbalance to fill it in. So therefore, this area would be good because it needs to fill in last week's price action. So we could possibly be getting it up to that area to take a sell because it needs to retrace. On a Tuesday, we should see our high or low of the week. So on Tuesday, which was today, that is our low. Yeah, so it's crazy. The more you look into on the Tuesday, which was obviously, like I said, today, that is the low of our week. So theoretically, it shouldn't be going any lower this week than that. It could do, could be wrong. You know, it's if the banks want to play nasty, they will. And then what we typically would be looking at is a midweek reversal objective. So if price wants to obviously start pushing up to fill all this in, it may come down to here. We take the trade, and then the midweek reversal would be to take it back up to this level up here. And then Thursday, we could take another sell now. So we buy it from here and we sell it. We sell it now from there to complete Thursday. It push into weekly trend objectives, point of interest. Yeah, so Thursday, a lot of people don't do this, but you know, the big boys do is hold the trade over the weekend. So it could be maybe Thursday, by the time we see price up to here, we take the trade and it starts to drop and drop and drop, and then it's Friday. So it's at 10 p.m. on a Friday, the market closes. Yeah, so we could be sat around this area on Friday. Yeah, and then we just wait then until Monday, Tuesday, it comes down, hits our take profit, and there you go, the trade is done. So there's always a cycle to the week really, or the other. You could look at it the other way. Would be Wednesday is the midweek reversal. Yeah, so we've got our low. Wednesday would be reversal. So pushing up to here, push into weekly trend objective. Yeah, so a push up to there, then you could possibly see on Friday a 20 to 30% weekly move to pull back and slow down. Yeah, so on Thursday, Wednesday and Thursday, we could be taking a buy up to here. Price could drop 20 to 30% down to here, but my guess would be what would be up here, a candle off the banks, which would be what, last up before the down move. So Friday, we could see price in this area. On Monday and Tuesday, what do we have? A retrace. So it could be retracing back up to the last up before down move for us to take that the next week. So you just need to, it's a lot to take in, mate. You just need to plan on the higher time frames and to understand all of this. But yeah, I'll be doing a lot more. This stuff has massively knocked me as a person as well, a little more confidence into my trading as well. So I'm getting more confident now. Hopefully not too confident, but I'm winning a lot more now. So I'll start be doing a lot more trades and stuff. But you know, feel free to mark stuff out, mate, and send it over to me. But what I would recommend is just delete all this. So if you've got a plain chart, session breaks on the 1 hour, I love the 1 hour. Yeah, so just mark it out. Yeah, it's there. There you go, bang. That's it. That's down before the up move. What do we need to do? Put an alarm in until price comes down to there. You can't do anything. What if price comes down to here and then pushes up to there? We can't do anything. Yeah, it's not come to our area. So just don't force it. Forget it. It's not going to happen. It may go up to there, and it may maybe 3 months before it comes back down to here. Until it comes down, there you go. It's pushing. That's not far off actually. So you know it won't move much because this is the London session, Euro GBP. So I would imagine overnight it's going to play along here nicely, slowly come into this area at 6 a.m. when is it 6 or 7? I don't remember. When the London Stock Exchange opens, that's when we'll see our push.
Yeah.
You could, if you want to, if you're not a morning person, I'm not. You could set pending orders on MetaTrader 4 if you want to. So it puts you in automatically. I don't like them because if I'm risking like 2, 3, 4, 500 quid on a trade and I'm asleep and I can't manage it.
Yeah, risking it.
I like them. I like to watch them really. Yeah, we've got this is a good sign. So we've got breaker structure here. Yeah, so we're just waiting for price to come to here. That's all you got to do. Yeah, until this comes down to here, to this area, we can't do anything. Yeah, so just mark them all out. You can try and have 10, maybe 12 pairs that you like, that you like the way that it moves, such as gold. I know it moves like 300 pips every day, at between 2:30 and 3 p.m. You know, it's all these things you start to learn. So CHF pairs I don't like this one here, GBP, CHF. I don't like it. I don't like my list. I'll delete that. They're all pretty much cryptocurrency. You've got them on there. You know, if you see something or somebody else and you like it, then
you'll try them out a bit.
Yeah, really, mate. So, yeah. Yeah, so there you go. That was I took that trade. Yeah, that's the perfect thing. Just leave the. There you go. That would be your answer to. Did the IC take out liquidity? Number 14. What was here? Liquidity area. Did this candle take all that liquidity out? Yes. Yeah. What was that? That was the last down before the up move. So did we come back to it? Yes, in this area here to mitigate. What did I do? We bought it, made money. It's quite simple when you sort of look at it, quite basic. Number 14. Number 15. Does that particular move break market structure? It broke structure here. I don't know what yellow boxes or liquidity here. So did it break structure? Yeah, it broke all this. So it pushed up. That move there broke structure. So again, it's just making it more probable. What else we got? Big structure. Engulfing candle. Yeah, is it engulfed? No, it's not actually. Yeah, just there you go. That's another thing. You've got a fib zone there, so I must have marked that from there to there. Stop loss was below that wick. Yeah, did it come to it? It just came to, yeah, we were more than fine.
Does this save automatically when you're doing this? You're marking it.
Yeah, you can save it at the top here. So click on that auto save to make sure that's on. It saves every 10 minutes. Or you click on save now, it'll save it instantly. So what we've got now is what we've got here: break of structure. It's broken down to the downside. This is broken. This price action. So what do we have? Another 1 hour. We've got not much. Last up, fall down. Last up, fall down. Here. That was quite tight. It's not great. What's on a 2 hour? Up, fall down. That would have actually taken you out. That's a prime example of, again, if you lost your 1% there, which it looks like you would have, you could have got a re-entry off this one here, this current candle, because this green candle went up to this last up before it's down. And then there's obviously a good chance it's going to fill all this in because there's imbalance there. Yeah, and it's broken structure, so we're looking to take it downwards. Where do we try and take it down to? What's always look left, remember, to trade right. What's there? Look at that. Just zoom out and see what's there. So we've got a last candle, last down before the up move. What's above it, protecting it, is imbalance. Yeah. So where do we take this trade to? Oh, actually, that's been filled. that black line that's just come down to pop it. So what else we've got? So if we want to take it further down, the next one is here. Yeah.
Yeah.
So, and if it goes down to there, great. You could then take your partials and just let it ride. It may want to go down to this one or even this one. So you just got to sort of wing it, really. You know, it's just play it as you see it in front of you. You know, and you got to juggle it around. And just remember, these are on higher time frames, so you've got plenty of time to start playing and chopping things, really, because
yeah,
you know, it's not like the 1 minute on the try stuff. It's quite quick, so you've got plenty of time to move stuff around. So we could be taking that's imbalance. So short position, taking that from there. Stop loss above the high. We could be taking that to where? Down here, down to these lows. That's where I would take it. This low here. Yeah. So and that would be 24% growth.
Yeah. It's probably best if I sort of just mark some stuff out and get used to it.
Yeah. Just start off with, mate. Just marking out. There you go. Look at that one. Spot it straight away. It's one here. Last up before down. Last up before down. Yeah. Just mark them out. And then in price, imbalance as well. Just mark out imbalance. And just send them over to me if you want.
Yeah.
How you do that? Just click on the camera up here at the top. Click on that, and then just copy and paste that link. Yeah, and I'll be able to see, I'll be able to view it perfectly then. Unless you're very good with the camera.
Yeah.
Can't Jake me.
You trading every day, are you then? You taking trades every day?
No, not really, mate. So you know, that's again, you've got to write out your plan and make sure you sort of stick by it. You know, it's pretty much I'm aiming for 250 a day, so £1,250 a week at the moment. So you know, as soon as I hit that, I don't trade anymore. So like today, I've hit that. So I've got Wednesday, Thursday, and Friday pretty much on a day off now. Yeah. It's really hard for me to do, very hard, because obviously what we all want to do is, oh, I've done 1250, I can make more, I can make more, I can make more. That's what I used to do. What used to happen, my head used to go, I used to lose all that money. So it's very hard to do, but I know now if I jump back on and take other trades, if I do, it'll be very, very, very small. It'll be like 20p's. It'll be very, you know, I'll be risking like, 40 quid in to potentially gain I don't know, 100 quid, something like that. It'd be very, very small. I'm just secure the bag, because at the end of the day, you know, you don't obviously have to tell me, but if you've got money in your bank, then you know you're not just going to give it to some random person and say, yeah, mate, there's £5 out of my bank account. It's yours.
Yeah.
Keep it, protect it. It's your money. You know, it's the way I think about it. It's taken me fucking 2 years to get to here. I've blown 7 accounts. So do I want to blow an 8th one? Most definitely not. So you know, I've got to learn from all that stuff. Where I've gone wrong. That's the biggest. It's just greed. It's all built into us. You know, we always want more. We always want to do better. But yeah, if you've got any other questions, mate. So this is recorded. I'll stick it on YouTube. I'll send you the link if you want to watch it back.
Yeah.
A lot to take in.
Yeah, I've made some notes and stuff, but yeah, I can watch it back.
Yeah, watch it back, and then you'll get more questions, which hopefully when you're watching it back. So just type them out to me.
Yeah, because I can watch a bit and then probably mark some stuff out and then watch a bit more. Do you know what I mean?
Yeah, it's just it makes you feel like playing with Lego. You build it up until you get there. But what I'll be doing is try and break down just like imbalance for like half an hour sessions, and then just I don't know, engulfing candles for half an hour. So I'll put them all on YouTube then. So if somebody wants, if you understand like 10 things out of 12, and you don't understand 72 things, you can go on YouTube then, and then just watch them 2 videos. A bit like the Academy, but a lot more less professional. Yeah, anything you need, mate, just let me know. Hope that helps.
That's cool, man. Yeah, that's helped out loads.
No worries, buddy. I'll catch you soon, mate. Anything you need, let me know.
Yeah, cheers, mate.
All right, cheers. Take care, mate. Good night.